What's going on, guys? How you doing today? This is the weekend, so a great way to explain um, an aspect of trading that a lot of you guys were asking me questions about. It's been the liquidity grab. All right. So if you know all about the liquidity grab, don't bother watch this video. This is basically for the people who wanted me to get further into it. Okay. So in cognitive learning, or grasping anything mentally, instead of looking at something like a formula like A plus B equals C, it's good to add some type of relevance or meaning to what you're doing. Okay. So, yeah, I may go and look at a liquidity sweep followed by a break of structure, and then a dip back into the fair value gap. But if I don't know why that's happening, it may be hard for my mind to grasp that. Okay. If you get what I'm saying. So right here, this is a line chart that I've drawn, and at the top and bottom, we have some resting liquidity. Okay, but let's not forget that, or ignore that, you have liquidity elsewhere as well, at least beforehand. So just because you have a high and a low, it doesn't mean that there's not liquidity sitting in between. Okay, so for instance, right here, liquidity was resting, all right, but now that price has went below that area, it took that liquidity out. So you wouldn't have to worry about that anymore. Um, but another area where liquidity is still resting, so this still wasn't taken out. Price came down here, but there's liquidity resting here. This was not taken out yet. All right. So when you're looking at trade setups, you're marking off all possible areas of liquidity. Okay. It's just the highs and the lows are the most attractive. Okay. Now, once a trade is starting to commence, and I hope you guys are not looking at getting into a trade at all times of the day. All right, it heavily depends on the asset that you are trading. All right, you're trading Euro USD, pound JPY. You'll be looking at London session. All right, you're trading the indices, right? S&P 500, US 30, Nas 100. You're looking at New York session. All right, not that sometimes it pumps at London, but you know New York session is when you have the volatility from the indices. So stay true to the asset. The time of the asset is pumping. Okay, because a lot of this trading is algorithmic. Where if you're trading smart money concepts, you're trading based on the theory that it is heavily algorithmic and based on timing. All right. So if you're trading all times a day, 24/7, you're going against the whole theory. Okay. So stop. Anyway, say this is New York session, and we're looking for some liquidity to be swept. Before I do that, let me just mark off the other areas. Right, got area here, area here, area here. Right. Excuse me if my lines aren't that straight. Boom. All right. So price goes up. Right. Takes out this liquidity here. Right. Now your eyes start to open up. Your eyes start to open up because step one was already done. um, this liquidity was swept, but now you're waiting for a break of structure because price is higher highs, higher lows. This is an uptrend. All right, so you're looking for a market shift. All right, boom, so it broke this structure. Right, so is you want to look now to see your setup fully come to fruition. You are looking for price to come the other way. All right. So price comes the other way, right? But it didn't break structure yet. You're waiting for these lows here to be taken out. All right. So step one, the liquidity sweep. Liquidity was swept. All right. Just like it was swept here, but it was not followed by a break of structure. So you're leaving that trade alone. All right. The break of structure signifies signifies a change in the trend. All right, if from going from higher highs and higher lows, and now if it was an uptrend and now this higher low was taken out, it's a market structure shift. Okay, and the reason that is significant is now the market makers, the whole methodology is the market makers sweeping liquidity to fill their contracts. All right, because you have like a lot of money that these hedge funds and market makers are controlling, so they take these the liquidity out, which is the other side of the transaction. This is a zero sum game. So if I am buying an asset, someone needs to be selling it to me, and vice versa. If I'm selling an asset, there needs to be somebody buying it from me. All right, it's a little simpler to understand in the stock market because you're buying a tangible asset, right? Shares, an actual company. But here, maybe a little harder to understand because you're just betting on up or down, but it's still a zero sum game, just like the stock market. So when you have traders that are also that are already in sales, they have their stop loss on the other side. Okay, so when the market maker now runs those stops are actually the buys that are on the other side to fill their sell transaction. Okay, along with the stops from like the traders that were selling, you also have buy stops here. So like a lot of people they'll say, okay, if this area of resistance was breached, I'm gonna get into buys. So you sweep the stops as well as tagging the buy stops into the trade just for them to go in the other direction. All right, so that's why they go for the stops, or that's why they sweep the liquidity. All right, so now once the liquidity is swept, quite often you'll see an impulsive move. All right, boom, right now, and it's if it's too hard to see, that means it usually didn't happen. Okay, because the impulsive move, it signifies their orders were filled. Now we're starting to go in the direction that they want to drive price. All right, and that impulsive move, kind of think of, I like to uh, give this example, like take a crayon and then you slide the crayon across a white piece of paper. Right, there's going to be some gaps in it because you're not being careful in drawing a line. You're just swiping the line, so you might have little some areas where you have no ink on the paper. So what with this moving abruptly, there'll be some gaps, like some areas where the candles are not connecting by bodies and wicks. All right. And that creates an imbalance. An imbalance that price usually goes back to. Now, it doesn't have to, and it does not always go back. It sometimes doesn't go back at all. Sometimes it goes back and doesn't fill it completely. And sometimes it doesn't go back right away. But and you have to be willing to walk away from that. But the steps to this strategy after the liquidity sweep, the impulsive move that breaks structure, leaving behind a fair value gap, which brings me to step three. Right now, say this was the fair value gap here. All right, we have a fair value gap here. You're waiting for price to go right back into that. So let me get my tool here. All right, so you're waiting for price to go back in. Boom. All right. And the reason price is going back to this area is to fill the imbalance. All right. It fills the imbalance. If you and there are fair value gaps all over the place. Not to not to confuse you here, but it's like the chronological order of what's going on here. Liquidity sweep, impulsive move that breaks structure, okay, and that impulsive move created a fair value gap. That is the fair value. That's the only fair value gap you're worrying about. All right. So once the price dips back into this, now you're looking for sales. All right, and you don't have to wait for it to turn back around. You don't got to wait for it to keep going up, whatever. you strike here. You strike here. All right. Strike as soon as it comes back into the zone with your stop loss above the high. Okay. Your first target would be, the next area of sell side liquidity, right? And the next area and the next area after that, right? Because just as they have to target liquidity areas to get into the contracts, they need to target liquidity areas to sell their contracts off, okay, and vice versa. So, if you guys have any questions about this, please feel free to leave comments underneath. You can PM me. I do private sessions as well. You get on a call with me. And if this gave you any value, leave me a like. Talk to you guys later.